JB here. Hope everyone's doing outstanding. December 19th, 2024, 8:56 on this fine Thursday. Talk really quick about the markets, the Fed, some of the names I'm looking at, and go from there. But what a crazy day yesterday. If you had told me, uh, expectations pretty much 100% that the Fed was going to cut rates 0.25%, and came in as expected. And then they came out with their dot projections, and it's for two cuts in 2025, which is pretty much what the market's been expecting, 65% or so. And it's been kind of flat for that. And then the markets, at first I thought it was going to be knee jerk, market sell off after the statement, and then they just kept falling. And then when Fed Chair Powell came out at 2:30, he didn't really do much in the way of alleviating those concerns. They talked about tariffs and inflation, and it's hawkish, which I think it's good that they're in a position that they have the opportunity to if things get bad, the economy gets bad, they can cut rates, be more aggressive. And on the flip side, if inflation rears its head again, we can either hold rates the same or start raising rates. The issue is it seems like folks are now expecting almost like what happened back in 2022, the higher for longer kind of situation. The markets don't like that, right? They wanted to see at least a more a downward trajectory on that, and also the possibility that once they normalize rates, that the rate is going to be higher than what expectations were. And some were saying, they'll bring rates down to 1.5%, 1.75%, 2%. Now projections, maybe it's normalized rate is 3% for the Fed. And what does that mean for mortgage rates? I mean, are they going to come down under 3, under 4, under 3%? The 30 years probably not going to come down to that. So now, the market has to digest that. So some of that overshoot you saw yesterday, you saw the VIX up 45%, yield soaring, the US dollar up at 2-year high levels. And all that kind of happened at once because people just kind of digesting that kind of information from the Fed. So I I put on watch. It's like almost like peeling off the Band-Aid, hopefully ripping off the Band-Aid. Painful yesterday, but rather that than prolonged situation where the Fed is maybe behind the eight ball like they've been before. And uh, maybe we can get some consolidation here today and get back on track. That would be the hope here. Uh, but similarly, always got to have a plan, right? So my spot on the SPY was 600. I said for the last couple sessions, we get under $600. That's where I'll add put hedges. The market actually held 600 for a couple minutes, bounced off of 600, and then it broke, and that was it. So for today, and I have my annotations on the chart. 585 we came down to. Sure enough, what happened on the spot? We bounced at 585. So that'll be a spot where I'll look to get more put hedges. Do we have shenanigans again and some selling? It's possible. I'm not going to rule that out, but hopefully we can find some footing here. 590 would be a nice close. We're trading over 590 here this morning. And the VIX, which soared, it's down 23% here this morning. It was down a little bit more than that. So some of that volatility is coming out. Maybe that'll bode well. But I take things glass half full, glass half empty kind of situation. I'm the glass half full kind of person. You look at the amount of stocks over their 50-day moving average, and it just tanked under 20%. We haven't seen that in quite some time. So to me, that's an opportunity. There might be some. We had a reset yesterday. Hopefully, maybe a little consolidation, and there's some opportunities for upside. That's kind of what I'm thinking right now, but I'm certainly not going to rule out that we do have further pull. And then if bears start taking control, we can they could push it down. But it's just funny how all the bears come out of hibernation on the big sell off. Oh, I told you so. I told you so. And we've been trading near all time highs for for the last 2 months. So anyway, that's kind of in a nutshell. Take a look at the amount of stocks on the 50-day moving average, just impressive. Small caps down 4% yesterday. And then the VIX, and put it in perspective, actually the VIX was up 74% yesterday, but it's not anywhere near that 65 spike we had back in August with that Japan yen carry trade fiasco. And then last but not least, yields. So the 10-year yield is back over levels we haven't seen since May. Of course, a lot of sectors that are very sensitive to rising rates, and of course the housing market is one of them. And I think housing starts coming out today, or new home sales that today, or they already come out, or it's coming out tomorrow. But it looks like this year might be the worst for home sales in recent memory. But again, to me, that creates opportunity, right? There's pent up demand, pent up supply, and once that comes to the market, I think that'll bode well. All right, so that's the overall market. So individual names. So I put on a watch list that 600 spot on the SPY. I didn't think it was going to break, but once it did, I was looking for some hedges and some usual names. Typically, I look at Broadcom. Typically, I look at Lam Research. Uh, but and ServiceNow. ServiceNow premiums are nuts on that, so I went past on adding some puts there, put hedges. Then I was looking at Lam Research. That was actually still in the green, so I passed on that. Um, and then I'm just looking at some of the high beta names that typically move big with the market, right? So one of those is Shopify. Shopify had a huge gap after its earnings. I'm not saying it's going to come and fill the gap back under $90, but it was showing some weakness and had found some inexpensive puts to protect for downside. Within a matter of 30 minutes, it broke into money. I was able to close some of those out for 400 and like 600%, 700% or so. Still holding a few here. I'll probably use 113 as a stop, uh, just because I don't want to be in a spot. We have a sell off in the afternoon or what have you. Uh, but it's trading down here 110.70. So it's up about $1 here in the pre market. But that provided a nice hedge. And then I also got some Broadcom calls. We started to break 595 on a SPY. I just want to have another position to play for further downside to offset some of my call positions. And it was actually holding up pretty well, relatively well, and obviously it had its big move since its earnings last week and then into this week. So I'm not saying this one comes and fills the gap, but maybe it comes down to that 210 level that it was trading at. So I went and got some 210 hedge puts. I was able to close some near the end of the day for a little over 100%, and I'll hold those as well. Maybe 230 would be the stop, depending on what those puts might not be too much anyway. But I think those are off for a good hedge. And now on the flip side, well, the silver lining here is the market was selling off, the U.S. dollar was strengthening, and gold was selling off. So I keep saying it's like a snowball rolling downhill. I think it's just a matter of time before it breaks under that 2,500 handle. I think it happens towards the end of this year or into next year. I think it's going to happen pretty quick. Uh, I was looking for other positions to play for it, and I talk about Dust and J-Dust as the miners to play, especially if the market's selling off. If gold sells off and the miners sell off, it's a double whammy. Those ETFs that play downward usually go up on gold selling off, and then they usually go up as miners sell off. So if you're getting both of those happening at the same time, they go up twice as fast. So that's the ideal scenario. So unfortunately, I keep saying the spreads are wide, but I'll keep kicking myself. And then the next time I look at dust, it's gonna be $100, right? So I don't want to be in a spot where I miss that move. So maybe today's the day I add it, and it's almost you take a look at the chart and that downtrend, it's broken, and it's under the 50-day moving average now, gold, and now that 200-day is right at 24.77. I think that's the next target. So call me crazy. So now individual names, unfortunately, with the pullback, you have names like Square down 7%, just a monster move. They're just for no other reason the market's selling off. So of course, what happens this morning? Another upgrade. This time, Oppenheimer upgrade the stock to outperform from perform. $115 price target. The sell-off yesterday created some opportunities. So I would, instead of looking to add some more December strikes, I might look to get January strikes here on block to play that for the eventual move back over $100. JOBY, which is trading at over $9 right at the Fed statement at 2 o'clock. Sure enough, what does it do? Sells off for the rest of the day, reverses course over $1, trades down nearly 3%. But all things considered, it's had more volatile moves over the last couple of weeks. So not anything out of the ordinary, but unfortunately, thank Fed Chair Powell for that. But still like this one, but I'll be patient for the April strikes. Still looking good there. Travelzoo was over $22 yesterday, right at the Fed meeting. I think it 22.50, 22.44, and then it gave back all those gains, closed at 24. So pretty much a 10% reversal on Travelzoo. Maybe that's the opportunity to add some strikes here. But again, I'm going to be very cautious. As much as I want to nibble some of these opportunities, maybe there'll be better opportunities in the coming days. But I've been saying it the last couple sessions. We're a historically strong period here. So I think if there is a bigger dip coming, I think there's gonna be a reversal. There'll be some great opportunities. So that's kind of the mindset I have myself in right now. And then just using 585 on the support as SPY. So if we break under that, I'll look for more hedge puts. And that's that, folks. Have a great day. I'll be back on audio later. Rock and roll.